Hey, what's going on everybody? Welcome back. It's Travis here with JT Wealth. In today's video, we are going to be talking all about Reddit and how retail investors have made meme trading great again. So let's get into it. And I know, obviously, when you say make anything great again, it attracts a lot of weird attention from people who either hate the phrase or love the phrase, but I promise this video is going to be bigly, so stay with me. And embarrassing side note, I'm literally filming over half of this video again because I forgot to plug my microphone in, so that's fun. I think everybody is intimately familiar at this point with Reddit and its impact on meme stocks, whether that was AMC or GME. One way or another, a lot of people have made a lot of money betting on the behalf of AMC and GME via options, right? On the same token, a lot of hedge funds, large investors have lost a lot of money in their attempts to short the same stocks. But now Reddit is back at it again, but this time with some stocks you may not have considered. One that doesn't even have a short interest that really justifies their interest. Before we get right into which two stocks those are, don't forget, if you're looking to start a new investment account, check out the links in the description section down below. Right now, the one I would recommend to you is Webull, mainly because you can get 4 free stocks just for signing up. 2 free when you create your account, and the second 2 when you invest your first $100 within 30 days of signing up for your account. And for anybody else who's looking for a way to get some more personal questions answered, consider checking out the link to the Patreon account down below, which gives access to our Discord chat group, which is where we're able to answer your questions in a little bit more detail and help out with maybe your dividends or your growth or retirement planning, whatever the case may be. And if we can't answer your question, there's a lot of people in there with a lot of knowledge that can definitely help out. All the administrative stuff out of the way, let's jump right into the first article talking about these new meme stocks. This came off of Yahoo Finance. It's titled "Retail Traders YOLO a Second Time Their Morning Brief." And this article appeared in the morning brief this morning, I believe, at 5:02 a.m. So it says the meme stock trade is making options great again. The two stocks we're going to be talking about today are Clover Health and Wendys, which blew up on the stock market on Tuesday. Ticker CLOV, Clover Health, and ticker WEN for Wendys were the stars on Tuesday, rallying after shares became the most popular ticket on Wall Street Bets, the Reddit forum. It's tracked closely by traders, media members, and now Wall Street pros alike for all signs of where retail investors might throw their weight around next. It goes on to say no area of the market has been more shaped by retail participation than the single stock call options. And those are call options and contracts that offer investors the right but not the obligation to buy a stock at a certain price in the future. So for example, when people were buying into AMC heavy, they'd buy like a single stock, AMC, and buy a call option on it, assuming that the price is going to increase. Using that kind of option derivative allowed the investor to make a lot more return on that single investment than if they had just bought a single stock itself. Call volumes specifically picked up sharply over the last 2 weeks, while put volumes remained subdued, taking the put-call ratio close to the 15-year lows. That increase has been led by single stock options and some ETFs, and call volumes have previously been a really good indicator of retail involvement in the market. It then mentions something I think is kind of interesting. It talks about financial professionals and Wall Street as a whole saying how they anticipate the market going back to normal, and they've been saying this for a little while now. But when pros say the market will get back to normal, what they really mean is retail investors will kind of get bored and stop buying stocks. And I think those of us in this industry, whether you're a finance YouTuber, a trader, an investor, whatever the case may be, if you've been watching the markets, you may have actually seen this kind of start to happen. People have gotten tired of the markets, and they're getting tired because stocks aren't just going up anymore. But I hate the philosophy that the retail investor is just going to eventually get bored and start ignoring the stock market again. If anything, the last almost 2 years should have brought a lot of attention to the market for the younger generation and generations to come. Please do not get tired of the market. Don't let these hedge funds and finance guys and Wall Street people beat you out of the market, because this is your future you're planning for. So I'll reiterate that one more time. Wall Street is waiting for you to give up. They're waiting for you to quit. Do not give up. Do not quit. Invest smartly. I'm not saying do everything Reddit tells you to do, but don't give up on the market, because that is just giving up on your financial education and your financial success. That being said, Let's check out the second article talking about these meme stocks. And this one came from Bloomberg. It's titled, "The Newest Meme Stocks Extend Gains with No Sign of the Craze Fading." So this morning, Clover Health Investment Corp soared as much as 30%, and contextlogic, one we haven't mentioned yet, rose 27%, both extending sharp gains from Tuesday. Geo Group Inc. jumped 64%, while fast food restaurant chain Wendys reversed Tuesday's gains and fell 5.9% after a stifled downgrade of the stock. Trading in so-called meme stocks like these took off again this week, with chatter building on Wall Street bets and other social media platforms for that short squeeze. And this creates a speculative frenzy among the Reddit favorite names and has been especially pronounced as a broader stock market hasn't gone anywhere for most of the past month. You look at AMC, you look at Clover, they've jumped at least 85% in June alone, whereas the Russell 3000 index has only advanced by 1%. So Reddit has a trend of going after companies and stocks that are taking on a lot of short interest. And contextlogic and Clover Health are no exceptions to that. Let's take a look at these two. Gains for the contextlogic, the operator of a discount online retailer Wish.com, followed discussion of a potential short squeeze on the Wall Street Bets forum. Clover Health, the health insurer backed by venture capitalist Chamath, is in demand after retail traders realized that short sellers had been selling their bets against the stock. So Clover Health's short interest is 32.7%. And contextlogic at one point was 57% short interest, but since the stock has moved so much, that is now down to 12%. And much like AMC and GME, we know Reddit usually targets broken businesses, companies that are almost bankrupt. So with these two companies in regard, I can't necessarily say that they're almost bankrupt or broken companies, but they certainly had a lot of short interest, and that's something these Reddit people are focusing on. But it begs the question, why Wendys? Where does Wendys fit into all of this? Wendys almost has no short interest at all. They're at 4.64% when I checked earlier today. The company has actually been fairly successful, and they're growing their way through this whole mess that we've been dealing with and finding out that they can continue to make money as people get out more and travel and go out to eat. Well, a few justifications have been laid out as to why it could be that Wendys has caught the attention of Reddit. The first is that it is still a very affordable stock. The second, they have an irreverent social media account that has been pushing their chicken tendies hard. And yes, it's very awkward to say chicken tendies, but there could be a duality there because Wall Street Bets and Reddit tends to use the term big tendies for big returns on money. Wendys also doesn't shy away from making fun of its competitors such as McDonald's and the like, so they do get a lot of attention from the younger generations who are very social media heavy. So they could see a very affordable stock with some strong fundamentals and a lot of social media attention as an easy stock to push the price up by just getting a lot of attention behind it. Whatever the reason, I'm almost tempted to say that it's nice to see the Reddit community getting behind a company that's actually doing fairly well, as opposed to the companies that are failing just to kind of get back at the man. I get that idea too, I don't necessarily oppose it, but it's good to see that perhaps some of them are learning something about fundamentals of a company. Or they just want chicken tendies. I don't know. So let's take a look at Clover Health a little bit closely, because you may remember them when they were a SPAC back in January. Here's a quick view of the Clover Health Investment Corp stock. From earlier today, it was about $21.44, having it down a little bit on the day. But you can see that 5-day chart. That is a significant jump up, pushing it to $21 from, what, maybe $8? And this article from Reuters has the man with the plan, Chamath, right there. That says $16 million bet on Clover is now worth $682 million after the Reddit rally. So the serial SPAC deal maker Chamath made over $660 million just lately after taking Clover Health public via a SPAC IPO back in January. Clover shares ended trading up about 86% on Tuesday as it became the latest meme stock to capture the imagination of amateur investors on Reddit and other social media platforms. The shares had deeply underperformed the wider market and traded below the SPAC's IPO price since February, when short-selling firm Hindenburg Research accused Clover of concealing from investors a U.S. Department of Justice inquiry into its business. Thus entered the short seller's interest that gets Reddit's attention. So Chamath's return here is 4,000% on his SPAC for Clover Health. But the Clover Health company now has a $9 billion market cap. And just for good measure, take a look at the Wendys chart from Yahoo as well. Here you can see that they're down on the day 10% after that big jump yesterday where they were up almost to $30, right? Probably about 28 something. But still $26.25 at the time of my showing this image. I think they're down around $25 right now. But look at their 1 year target estimate, $26. So in basically a day or two, they managed to shoot up from where they were at about $22 all the way up to their 1 year target estimate. So this is obviously a stock that Reddit can continue to manipulate and move should it so choose. So it would be crazy to not give some attention to what is going on in the Reddit world, as it does seem to have a direct correlation and impact on the stocks trading in the market. Rarely invest in hype stocks, but when I do, I put a very small bit of money in just to have some skin in the game. A couple weeks ago, I put a little bit of money in AMC stock. When it was up 300%, I sold out of it. That was a fantastic return. Did I have a lot of money in it? Not even close. Do I have that kind of buyer's regret where I wish I'd put more in? A little bit, but that's just not how I trade. Definitely more of a long-term growth and dividend investor, but it's always fun to kind of play these little games when they come up and just see what happens. All that being said, please remember none of this is financial advice. I'm not a financial advisor. I'm not telling you what to buy, what not to buy. This is all just presented for information and entertainment purposes only. And please, if you do decide to go out and venture into these hype type stocks, only invest what you can stand to lose. Alright guys, that's it for today's video. Hopefully you found some value in the information presented throughout today's video. If you have any questions at all, please let me know in the comment section down below what you thought of today's video. What are you thinking about Wendys? What do you think about Clover Health or contextlogic? What is your opinion on Reddit and their meme stock situation? Until next time guys, thank you so much for checking out the video. Bottoms up.